welcome back to another video, one which will hopefully leave you feeling much better about you keeping money in the bank. Now, I know it's felt like we've been living in uncertain times for years and years now, and it's kind of true. I'd say especially since the pandemic in 2020, but even going back all the way to the Great Recession in 2008, there's been a ton of uncertainty with the economy, which undoubtedly makes people nervous and scared, and I totally get it. It makes you realize that you, as an individual, well, there's just a lot of things that are out of your control. And this makes people lose trust in things like banks. If the economy were to collapse, the idea that our money isn't safe at the bank is terrifying. And we've seen a number of bank failures happen in the US and other countries in recent years to fuel that fear. But here's the thing. If you know how to protect your money, even if your bank does go bankrupt, then you don't need to let those worries cloud your judgment and make you think that your only option is to hoard cash under your mattress. Please don't do that. Inflation will eat into its value, and taking your money out of the bank and keeping it at home or in a safe, well, that's some of the worst financial advice I see online that is completely based on fear, not logic. So let's take emotion out of it and look at the facts. Number one, the last bank failure in Canada occurred in 1996 with Security Home Mortgage Corporation. That was almost 30 years ago. Number two, but even though that bank did go bankrupt, and that's not good, the upside is because it was a member of the Canadian Deposit Insurance Corporation, CDIC, depositors were protected. Number three, in fact, since CDIC was established in 1967, there have actually been 43 bank failures in Canada. And not one person who had money with those banks lost a single dollar under CDIC protection. Number four, for a deposit-taking financial institution like a bank to exist in Canada, it has to be a member of CDIC. The only exception would be credit unions, but they have their own provincial deposit insurance corporations they must be part of as well. Number five, how CDIC can afford to cover Canadians' deposits if a bank fails is each member financial institution has to pay insurance premiums, just like you have to with your home or car insurance. Number six, there is no public funding for CDIC to operate, meaning none of your taxpayer dollars are being used to fund CDIC. Number seven, CDIC's fund, the pool of money they have access to in the case that a bank fails, is made up of two parts: a portfolio of all the member institutions' premiums invested so it can maintain its value over time, and borrowing authority, meaning CDIC can also borrow funds from the Government of Canada via the Consolidated Revenue Fund, CRF, as well as private sector capital markets. This is so they will always have enough money to pay for any bank failure to protect all Canadians' bank deposits. Now you know the facts, but the big thing that trips people up is how exactly CDIC's deposit protection works. First, let's talk about what is actually being protected under CDIC. Well, first, we've got deposits in Canadian or foreign currency. Then we've got guaranteed investment certificates, GICs. And lastly, we've got other term deposits. That's what's covered. But here's what's not covered: mutual funds, stocks and bonds, exchange-traded funds, ETFs, and cryptocurrencies. Not only that, there is a limit on how much of your money can be covered, but it's a really high limit, and there are some workarounds to get more protection. So CDIC insures eligible deposits, the ones I just shared, up to $100,000 per category per member institution. Here are the different categories: deposits held in one name, deposits held in more than one name, like a joint account, deposits held in an RRSP, deposits held in an RIF, deposits held in a TFSA, deposits held in an RDSP, deposits held in an RESP, deposits held in an FHSA, and lastly, deposits held in trust. So for example, if you banked at ABC Bank and you had a personal checking account, a joint checking account, an RRSP, a RIF, a TFSA, an RDSP, an RESP, an FHSA, and a trust account, all with $100,000 in qualifying deposits in each account type, you'd effectively have $900,000 worth of deposits at that bank. And if you had those same accounts with the same amount of deposits in there at XYZ Bank, well, you'd be covered for another $900,000, totaling $1.8 million in coverage. With that said, if you had more than $100,000 in one of these accounts with your financial institution, that excess would not be covered under CDIC. In that case, you'd want to consider opening a new account at a different financial institution to house that excess so that money could then be covered. Now, to make this easy for you, and this is a tool I've been directing people to for years to help them better understand how much they're actually covered for, let me show you the CDIC coverage calculator. Okay, so let's pretend you have a personal checking account with Bank of Montreal with $10,000 cash in it. You also have a personal savings account with Bank of Montreal with $25,000 cash in it. Then you have a joint checking account with your partner at Coast Capital Savings with $4,000 cash in it. Then you've got a TFSA with $6,500 worth of GICs in it at National Bank. You also have an FHSA with $10,000 worth of mutual funds inside it from Tangerine. How much is covered in the end? Well, as you can see, all of your eligible deposits at Bank of Montreal, Coast Capital Savings, and National Bank is covered under CDIC. But because mutual funds don't qualify, CDIC will not cover them. Now, because every person is different and likely you have a lot of different accounts at different institutions, I highly recommend just taking a few minutes to try out this calculator yourself by putting in all of your accounts and deposit types to see what is and isn't covered. I promise you it will give you so much more peace of mind, especially when it feels like everyone on TikTok or YouTube is constantly talking about bank runs and the end of days. Now, although we likely have quite a bit more uncertainty ahead of us, the one thing you can be certain of is how your money is actually safe at the bank. The facts don't lie, but if you still aren't sure or you just have some more questions about how it works, please let me know in the comments or check out all the great educational resources on cdic.ca. Well, that's it for me. Thank you so much for watching, and I'll see you next time.